David here. Weekly. Today is Sunday, 2nd of September, 4:30 in the afternoon. Markets obviously closed. We're looking at the November contract 2018. Probably the last report we'll do on the November contract. Probably look next week swapping to the May contract. We've got the long-term yearly contract in front of us, monthly candles, yearly. We can see, identify that we closed on Friday 186.75. The stellar candle here was in July. We can see August here. They closed with this sort of wick either side, indecisive, a little bit on the toppy side on the stochastic, but trend still well in place. The short-term moving average here, the 30 has crossed the the 10. No, the 30 has crossed the 60 monthly moving average on here, and everything's pointing up. So let's pop down into the all-important daily. We've got the daily chart here, move the mouse over here. We can identify the swing high here, 198. We came down here and we touched the low of 176.20. 10% from the top comes down at 178.51. We had one day below it and then we reversed it quickly. Last week's report, I was saying the market did look a bit oversold. We'd had 5 days of falling market and we were looking for a bounce. This took place the beginning half of the week. Short week, we had a bank holiday Monday. We bounced up and we retested the monthly close at 186. We also on the process now, if I move my mouse over here, you can see we're testing the 10 SMA, short-term moving average, and below it we've got support coming in on the 50 SMA on this daily chart here, and so we've got like a tweezer action going in place here. We've identified key numbers of 190, 180, 170. We've got this long candle here. We had a test on Friday night. We closed at 82.12. 82.30. The moving average came at 82.12. So we're just above the 10 SMA. On that indication, I would look for a recovery bounce back up to test the 190. And even look up to test this gap we left back here, 190.60. All important that we don't take out this swing low now of 177.80 because then obviously we'd look to go down and test 170. But it's very confusing at the moment when you get this situation. You've had a lovely long-term trend. Really, basically, what we've got to do is backfill or range, whatever you like to call it. We've got a high, we've got a low, and now we just go sideways within this price action until we see a break of the swing low, or we see a break of the high of this gap fill, and then went up even higher. So at the moment, as we sometimes see, we've had the excitement of the rally. Now we've got the sort of mundane price action of a sideways market. My indication, 3 ways, we either go down sideways or go for a bounce option. I would look for a bounce to go back up and test the 190 next week, and I'll put an update this time next week. Thanks for watching.